Welcome back to the Crypto Clown World podcast. I am your host with the honks, Jason Bruce. It's the 18th of May, 2024, and we are honking back into our weekend broadcast. As always, I have my co-host here with me, Mr. Christopher Lundy. How are you today, sir?
I'm winning like Charlie Sheen, sir.
All right. All right. We are definitely bouncing around. So, with all that said, it's been a pretty upside week for the markets. Things have been bouncing back pretty good, and we've got Bitcoin between about 66 and 67K right now. So markets have picked back up, and we kind of negotiated some critical levels, and we're probably at that last critical resistance here before we can say things are really going to get moving again. So there's been some things going on in the background too, and I know you've got a few things to go over as always, sir. So I'll let you get into a few talking points, and we'll dovetail some TA into all of that.
Excellent. Very good, Jason. Thank you, sir. Okay, so this episode, I'm going to be covering more economic and crypto topics than I will geopolitical, but it's going to be more of an even balance. So let's start off the top of the show. Big news from the finance space as it relates to Chainlink. So both DTCC and Chainlink, in an article published to CoinDesk, have completed a pilot to accelerate fund tokenization with participants including JP Morgan, Franklin Templeton Investments, Bank of New York Mellon is also participating. And as a result, as of May 16th, 2024, at press time, 6:22 p.m. UTC, Link had gained 7% on the news. Normally, you see these as sell the news events, but with the amount of liquidity that usually rushes in with these types of investments, you'll typically see some pretty fast pumps even on well-capitalized projects such as Chainlink. So what is the purpose of all this? It's, as the leader says, tokenization, fund tokenization, specifically exchange-traded fund tokenization. So it's about tokenizing on Chainlink. Now, as I stated on last week's show, Exodus Wallet intends to tokenize its New York Stock Exchange listing, assuming that the SEC completes their review favorably for them, on the Algorand blockchain. So tokenization is not something that's strictly exclusive to Chainlink. Tokenization can happen on any blockchain that supports it. So, but the aim of this is to test a process and then disseminate fund data across chains. And that's really the key factor for tokenization, because you can't just have tokenization on one walled garden. You need blockchain interoperability standards. And Chainlink is one of several projects that focus on blockchain interoperability, including Cosmos and arguably, debatably, Ethereum, among others. So DTCC is the Depository Trust and Clearing Corporation, and they're the largest security settlement system. Okay, so that pilot project that I mentioned was completed. Now, if we look at the protocols of this and the technical stuff, I don't want to bore you with it, but the basic factor of this is that, and the way that it works is to establish a standardized process to disseminate and bring net asset value, which is NAV. NAV data is how it's referred to in the financial charts, of funds, be they exchange traded funds or other types of funds, across any private or public blockchains using Chainlink's interoperability protocol, CCIP. So public or private blockchains. That's very interesting. So that means that anything can be tokenized, and Chainlink can essentially be, for lack of a better term, a clearinghouse for it. So here's a complete list of market participants. They are American Century Investments, Bank of New York Mellon, Edward Jones, Franklin Templeton, Investco, JP Morgan, MFS Investment Management, Mid-Atlantic Trust, State Street, and U.S. Bank. So that's a fairly sizable conglomerate of capital that's going in there. So now the pilot is done. This is not yet in production. It's strictly a pilot project, but once it goes live, I would most likely expect to see Chainlink start to see some more movement to the upside as a result of that news. But that is published on CoinDesk as of May 16th, so feel free to have a look at that article when you get a chance, when the time is right for you. Now, moving on to debt to GDP as a percentage of GDP. So this is government debt as a share of GDP. I'm going to go over a few different countries, but I'm going to give you a complete picture from east and west. So the top of the list is Japan. Government debt as a share of GDP is 252%. Singapore is at 162%. Italy, 137%. Laos, 122%. Laos is in Southeast Asia, adjacent to Thailand and Cambodia. Then below that, you've got France at 111%, Spain at 108%, the UK, United Kingdom, at 101%, and China at 83%. These are large economies, ladies and gentlemen, and they're all struggling with at or near 100% or above debt to GDP ratios. So what this tells me is that we're very much in a very similar situation to what occurred prior to the Weimar Republic hyperinflation, which was competitive currency devaluations, also known as, in the press at the time, which would have been quite a while ago, approximately 100 years or more, would be called beggar thy neighbor financial extortion. And this is expected to increase, in my opinion, from my perspective, because of the geoeconomic and geopolitical changes as a result of the Russia-Ukraine war and the situation in the Levant as we speak. But interestingly, at the bottom of this list of countries, and this is a list of approximately 18 countries, the lowest two in the list are Turkey at 29%, which has seen crazy hyperinflation over the course of the last several years. So it looks like they hyperinflated their debt away. And Russia is sitting at 20%. And Russia is the least indebted country in the world, which means that these large economies outside of that purview are overextending themselves, while countries such as Russia or Turkey have onshored and increased their domestic production capacity. They have removed a lot of the barriers to localized investment. In Russia, for example, genetically modified food is banned, which has created significant economic problems for countries that produce them, namely the United States primarily. And this is expected to see knockoff effects, not just in terms of, the war situation, but also in terms of the prices that people pay for goods and services. And the higher that this number goes, I expect inflation to go with it as well. Speaking of inflation and how it relates to the unemployment rate, the official unemployment rate in South Africa has increased by 0.8% of a percentage point. And if you compare Q1 of 2024 and Q4 of 2023, and it is currently sitting at 30, this is the official unemployment rate, is 32.9%. The unemployment, according to the expanded definition, stood at 41.9%. That's astronomical unemployment, ladies and gentlemen. Typically speaking, when you're looking at unemployment figures, any figure in excess of 30% is something that is a leading indicator of civil conflict, as in the government versus the people, right? And as we speak, much of the South African establishment is embroiled in a not just a war of words, but a war policy in regards to what is happening in Levant vis-a-vis Israel. But their unemployment rate is very high. Their infrastructure is falling apart. Even as we speak, there are considerable amounts of load shedding problems that are happening all over the country, and staged blackouts and brownouts. So the economic picture in all the BRICS countries is not looking so rosy. There does not appear to be a consistent effect of alleviating societal pressure domestically in South Africa versus what's happening in terms of their humanitarian backed, whether it be purported or actual, depending on who you believe, protestations towards some of their geopolitical adversaries. So I would expect that these numbers are going to continue to go up, especially considering that farm murders and farm attacks of Boer farmers continue to this day, and there are open calls from the Economic Freedom Foundation, which is essentially the Communist Party of South Africa, chanting in public spaces to, quote, kill the Boer, shoot, shoot, in massive arenas filled with people. And take that what you will. The population historically, due to apartheid, oftentimes blames, shall we say, colonial powers for this problem, but South Africa has not been a colony since 1994. So the political will to make practical changes across the board is increasing. Speaking of which, approximately 1,300 to 1,400 farmers who were ethnically cleansed from their land in what is today Zimbabwe, prior to the establishment of Zimbabwe, it was Rhodesia, are currently petitioning the Zimbabwean government for payouts as compensation for being driven from their land. The details of it are rather incomplete right now. It's my current understanding that the compensation is going to be simply for improvements that were made to the land rather than for the land itself, perhaps as a way to reduce their liability. Whether or not that will be successful remains to be seen. Big news in Europe in terms of geopolitics. So the Georgian parliament, Georgia is a Caucasus country that borders Russia directly to the south in the Caucasus area. The Georgian parliament has adopted the so-called foreign agent bill into law. Now, this bill mandates that any lobbying institution that receives more than 20% of their funds, at or above 20% of their funds from a international source outside of Georgia, is required by this law to register as a foreign agent. And as a result of the passage of this law with a veto-proof majority, the prime minister of Georgia, who is in the pro-Russian camp, has announced this after passing the third and final hearing. And the pro-Western president, which is an interesting schism, has reiterated that she will veto the decision. And that president is Salome Zurabichvili. So the president is not going to be able to successfully veto this bill, unfortunately, because it has a veto-proof majority. So the Parliament will be ratifying it from the Speaker's chair. So that is expected to happen sometime early next week, if not imminently. And moving on to the southern Black Sea areas, the Prime Minister of Armenia, his name is Nikol Pashinyan, has stated that he wants to join the EU by the end of the year, which is bizarre, especially considering that Europe is nowhere near Armenia, at least by several hundred miles. But Turkey is also a member of the EU, and Turkey has, or a member of NATO rather, and has considerable sway with both the EU and NATO. So it's not clear whether or not this is simply a way to prepare the public for such a move. But joining the EU means, significant issues for Armenia, and it's very unusual that why they would want to do this, especially considering how Russia has assisted both Armenia and Azerbaijan. But the problem with Armenia is that their prime minister is pro-Western. So as a result, Russia has been distancing themselves from Armenia as a result. And there have been calls for the ouster of Pashinyan by the Patriarchate of the Armenian Orthodox Church, as I reported in last week's show. So the backing of Azerbaijan could simply be a geopolitical move to put pressure on Pashinyan to step aside. But the complexities of this are not entirely clear to me, especially considering some of the statements that have been made by Belarus in favor of Azerbaijan. Now, just as a reminder, the Azerbaijanis and the Turks, as well as uh, the Israelis, were involved in the genocide of Armenia in 1918, directly or indirectly. But of course, Israel was not yet founded in 1918, so it would have been different political backers that were present in the Levant at the time. There has been various accusations thrown out about various sides of this debate regarding the Armenian genocide historically. Now, if we look at current events, we understand why that took place. It was mainly to reduce geopolitical influence of Armenian Orthodox Christians within the context of Anatolia and the Levant. That at this time appears to continue to decrease as a result of their Western backing and the ties that Russia is making geopolitically throughout the Middle East as we speak. Now, moving on to the crypto space, very briefly, the Tornado Cash developer that was arrested, Alexei Pertsev, and he was found guilty of laundering $1.2 billion worth of crypto. And he is the co-founder of Tornado Cash, and he's been sentenced to 5 years in prison. Whether or not he will appeal, whether or not he has any alternative ways of challenging this is unclear, but there are several actions that have been pending both in Congress in the United States of America as well as private sector actors within the crypto space. Now, the crypto space is 10 times more wealthy than it was in the last election cycle. It is highly likely that the domestic war on crypto is either going to amp up and get a massive backlash or gradually draw down and find some degree of acceptance, because it is not just an attack financially domestically against the people of America, but also against Russia and the general Eastern powers, as it were, Russia and China. And that is tied in with the desire from BRICS, or at least considering utilizing Bitcoin as the energy settlement layer for payments internationally for the purchase and sale of oil. So keep an eye on that. Now, speaking of other economic news, the President of the United States, Joe Biden, has, through his X account on May 14th, 2024, approximately 11:14 a.m. Eastern Time, announced that there has been an imposition of a series of tariffs of goods made in China. This is 25% on steel and aluminum. China's the main supplier of steel to the United States, by the way. 50% on semiconductors, 100% on electric vehicles, and 50% on solar panels. He goes on to state, quote, "China is determined to dominate these industries. I am determined to ensure America leads the world in them," close quote. Interestingly, the rare earth elements that are needed to build electric vehicles and the factories needed to manufacture steel were largely outsourced by American companies to China from the 1970s through the 1990s. In fact, the steel that was exfiltrated from the World Trade Center towers after it was destroyed were sent to China to be melted and then was sent back to America to build an aircraft carrier, the USS Ronald Reagan, as I recall. So that's a rather ironic twist and turn of events, especially after the cash for clunkers blunder during the Obama administration, where people were encouraged to get some money for their old vehicles. But what it really was an effort to remove free electric vehicles from the market entirely in an effort to saturate the market with other electric vehicles. The problem with electric vehicles in this context is that the largest shipping container companies in the world have already banned most of the largest electric vehicle manufacturers, products from even transiting their vessels because of fire and vessel sinking risk, vessel destruction risk. So this could be much ado about nothing. I mean, there was also an announcement from, I believe it was Porsche, that they're going to entirely stop manufacturing electric vehicles entirely and go back to internal combustion engines because they aren't making the money. They aren't selling. So expect the electric vehicle hype to die down a bit because it's been a miscalculation. And the deliberate destruction of the supply chain shows that this head fake that's being presented is exactly that, a head fake. So be cautious. Don't fall for it. Other economic news. One of the longest lasting and most iconic restaurants in the history of America, Red Lobster, is preparing to file for bankruptcy protection this month. Now, they were preparing for bankruptcy protection, preparing to file for bankruptcy protection back in April, and they were considering doing so. Now, the reasons for this are purportedly, and I found this to be very amusing, that the endless shrimp promotion, which was priced at $20, was the cause of heavy amounts of losses. So essentially, it was a mispricing. This place blamed on a mispricing of their menu feature item. Problem with Red Lobster is generally it's a very expensive restaurant to eat at. Most people cannot afford to eat there unless they're eating on a special. And almost all of the orders went towards that promotion. Almost nothing else sold in the stores, which resulted in those discounted meals that would be used as a ladder effect to, charm people into buying everything that's under the menu. And something else that Red Lobster does is they don't actually list the prices for most of their menu items. They just and this took place actually. I know this because I used to work in the restaurant industry at a Red Lobster actually, and I asked them why they didn't list the prices of their products, and they stated that it discourages them from buying. It's like, why are you going to buy something if you don't know what it costs? It's like going to a car dealership with $5 and expecting to buy a $50,000 car. It's very bizarre. So, Red Lobster has been engaged in some very shady business practices over the years, and that appears to be catching up with them. And as a result, dozens of Red Lobster locations have been put up for auction, and the entire contents of those stores go to the winners of those auctions. So they will expect to see lots of lowball orders and lots of empty buildings that used to be Red Lobsters in the near future. Moving on. Toshiba has announced that it is going to be axing 4,000 jobs, and this was announced on Thursday. They announced that they would be slashing 4,000 jobs through offers of both early retirement to cut costs and to turn around its so-called struggling business. Now, Toshiba delisted in December due to a $13 billion takeover by a consortium, which capped a decade of scandal and upheaval at the company. And Toshiba is a Japanese company, by the way. And they had around 110,000 employees as of the end of March 2023. So a $4,000 job loss from a percentage standpoint is minuscule compared to other countries. But let's keep in mind how the fuel got cut off from Russia. You need fuel, you need energy to make semiconductors, you need it to make electrical components of any type. You don't have fuel, you're not going to be making anything. So there may be more layoffs at these high-tech companies in the future. It's entirely possible. An interesting development that I wasn't expecting took place this week in the United States Senate. They passed a measure withdrawing all SEC accounting bulletins, which essentially kicks the SEC out of the crypto industry entirely. Of course, it's not a 2/3 majority, so it's a non-news issue because it will be vetoed by the president, and it's not going anywhere. But expect the push for that to continue. The only reason why this bill hit the floor is because of the increasing wealth and lobbying power of the crypto industry in this context. Is that good or bad? I'll leave it to the viewer to decide. But generally speaking, I think that anything that creates better opportunities for people to participate in the space without being harassed for simply engaging in commerce is most likely to be a good thing, and I expect this trend to continue. And probably the biggest news of the day, but I'll go ahead and cover it now, is that China has dumped the maximum amount of money in history from American debt obligations. Now, it's not quite enough as a U.S. Treasury to create a U.S. Treasury crisis, but the amount that they sold was, if official figures are to be believed, between $100 to $130 billion worth of U.S. Treasuries. And at the exact same time, we saw many other types of assets go up, but we will cover that later in the show. Moving on to geopolitics, a huge bombshell article hit the Washington Post this week that has revealed that pro-Israel billionaires pressed New York's mayor, Eric Adams, to crack down on pro-Palestine protests to stop the current war in Gaza. So, according to the Washington Post, influential business figures had privately lobbied New York City Mayor Eric Adams to deploy police against pro-Palestinian protesters at Columbia University. Now, this is a general leader of a few paragraphs, so it's important to cover. The communications obtained by the Washington Post and sources familiar with the group reveal a concerted effort by business titans to shape U.S. opinion on the Israeli war in Gaza. Business leaders, including Kind snack company founder Daniel Lubetsky, hedge fund manager Daniel Loeb, billionaire Len Blavatnik, and real estate investor Joseph Sitt, held a Zoom call with Mayor Adams on April 26, 2024. Now, during this call, attendees discussed political donations to Mayor Adams and exerting pressure on Columbia's leadership to authorize police intervention on campus. Now, this chat group, which was formed after the October 7th attacks on October 7th, 2023, comprised about 100 people, including prominent billionaires and figures from real estate, finance, communications. Other participants included Michael Dell, Jeff Bezos, and several others. Now, Mayor Adams had demonstrated a readiness to address campus protests, dispatching police at Columbia's request on April 18th, 2024, to disperse pro-Palestinian demonstrators. And this was following subsequent incidents, and after which time Adams asserted that outside influences were, quote, radicalizing, close quote, student activists, justifying police intervention to prevent this radicalization. I would like to turn the clock back to the, quote, Violent Radicalization and Homegrown Terrorism Prevention Act. Anybody that wants to look at what's happening right now, all of this was prepared for in legislation long ago. So have a look at that bill, read the high points, and compare it to current events. As a self-education exercise, I would encourage the audience to do that. Now, in the wake of a new encampment that was erected by student protesters, now chat members subsequently intensified discussions on influencing Columbia's trustees themselves to align with Mayor Adams. Now, former Congressman Ted Deutsch, who's the CEO of the American Jewish Committee, contributed by sharing a letter urging Colombian President Moulouche Shafik, if I'm pronouncing that correctly, to quell the protests. And the group's activism extended beyond New York. It reached into the highest echelons of the Israeli government and U.S. business circles, elite in academia, which showed a concerted effort amongst the attendees to shape narratives regarding the war. What this basically means, ladies and gentlemen, is that private business people are openly engaging in efforts to suppress protests and freedom of speech domestically in the United States of America. I would expect that there will be significant lawsuits against all of these parties now that this information has been exposed. And Amazon stock has been on a downturn for quite some time as a result of I believe it was wasn't the Treasury Department. It was an antitrust investigation was launched, I believe, by the Department of Justice against them, or the Federal Trade Commission. I'll have to look at the press release, but these types of public pressure campaigns against the establishment are going to bear some fruit that's not going to benefit them, and that's why they're moving out so aggressively to stop those protests, mainly because that's the main basis of their power and wealth, and they can't have that challenged. Moving on. So, as it relates to geopolitics, Western countries are putting more pressure on Volodymyr Zelensky in Ukraine to start negotiations with Russia. It is highly unlikely that that is going to happen. I expect that there won't be a lot of changes from this, but according to sources, Western armies seem to have come to their senses. Ukraine will have to negotiate an end to the war, risking a worst-case scenario in which the Russians open another front. And this is according to Europe.1. Western chancelleries are preparing a coordinated diplomatic action to convince Zelensky to accept the principle of negotiations. It's not yet clear whether the Ukrainian president is ready to change from his stance of a war hero to the stance of a peacemaker. But considering the Mobilization Act that was just passed in Ukraine, that looks to be unlikely. Moving back to the Levant, the long-touted floating pier for Gaza aid has the capacity to handle 150 trucks daily. That pier is now functional. And the UN estimates that Gaza needs approximately 1,000 trucks of aid daily for at least a few weeks to overcome the shortages of food and medicine, critical supplies, etc. Now, it is entirely possible that if any troops disembark from those vessels, they may come under fire. And it is entirely possible that we could be drawn deeper into the conflict as a result of this, because the Rafah crossing is now closed, so there is no other way to get aid in. And this appears to be an effort to potentially forcibly ethnically cleanse Palestinians from their land and transfer them to other countries. Whether or not it will be successful remains to be seen, and what the actual outcomes of them are, whether past performance is a guarantor or not of future results, remains to be seen. So we shall see how that plays out. And as for the funds that I was talking about at the beginning of today's show, U.S. spot Bitcoin ETFs have seen, as of May 17th, an addition of $221.4 million of net inflows. So the sideways down descending channel from the peak of those buys appears to have broken to the upside and is starting to see more fund flows. How much that impacts the market directly is unclear to me, especially since ETFs are leveraged instruments. The amount of control of the price is going to be more in the hands of establishments, financial institutions, than it was less in previous years. That's my thinking in the matter. Moving on. The address poisoning scam that I covered in last week's show, it's still going on, but approximately 50% of the funds have been successfully returned. And this is according to a Protos article that goes over the details. And as I've mentioned in previous shows, Protos is one of my first places that I go anytime I'm doing research on coin projects, but it's not the only place I go. They tend to have some pretty good research, and I think that this particular scam mainly highlights the lack of security that Ethereum-based DeFi protocols, if you want to call them decentralized finance, actually provide to the user. If an address poisoning scam that can fit into the largest Ethereum wallet, which is MetaMask, is capable of being hacked to this extent. And I will leave it to the investor's decision of whether or not it's wise to remain an Ethereum investor or any Ethereum DEX investor with this news. Now, the victim of a $70 million address poisoning scam that I covered last week, they're in the process of being refunded after on-chain negotiations with the perp. So at the time of writing, about half of the funds, which was 14,500 ETH, which is worth roughly $43.5 million, have been returned to the victim's ETH address. And about a week after the initial loss of 1,155, wrapped Bitcoin, WBTC, I think that's wrapped Bitcoin, transactions of between 25 Ethereum and 50 Ethereum began to stream into the victim's address. Transfers came directly from the hundreds of addresses into which the attacker had previously dispersed the stolen funds. So the attacker accidentally doxed themselves, which should give us some interesting insight as to who the executors are of these attacks, who's actually doing it. So we shall see what happened here. Now, the reason for any of these funds going back to them could simply be a way of the attacker patting themselves on the back or an ego trip. But these types of scammers and thieves oftentimes have inflated egos. That's not surprising. Now, speaking of the mobilization laws, talking about in Ukraine, there's been a trucker strike that has begun on the new law on mobilization in Ukraine, and hundreds of trucks have blocked the Kiev-Odessa highway, and this is as of May 18th, which is today. So that's going on as we speak. And got a few more talking points here. And this is in relation to China, as I was mentioning earlier, selling off all of those treasury bonds. And this is from a X post on May 16th at 9:26 a.m. Eastern Time from Wall Street Silver. The Treasury has already blown through all of the revenue from tax day, and its cash on hand is down $300 billion from 1 month ago. Now the Treasury will have to issue more debt to pay its bills unless Secretary of the Treasury Yellen purposely runs down this cash account to make the debt look smaller than it is and help her boss in election year. And this is in response to an E.J. Antony, PhD, post about Treasury cash tanked $100 billion in a single day at the exact same time that China sells $100 billion worth of treasuries. They don't mention that sale anywhere in the tweet. Very interesting. So I don't know what that's all about, but I would expect that we're going to see some interesting movements in the precious metals markets as a result of this this chaos in the fixed income markets. Back to the Levant. There is a formal statement that was made today from the families of Israeli captives in Gaza. They are demanding the overthrow of the entire Israeli government and to stop the war in Gaza. They have the following demands. There are four main talking points, rather, more than demands, but they essentially are demands. Expanding military operation in Rafah means betraying the living captives and abandoning them. The blood of the Israeli captives is on Netanyahu's hands, so they're not blaming Hamas for this. They're blaming Netanyahu for this, which is interesting. Third talking point is Netanyahu must be removed from office immediately because he is leaving our captives to face death. And the fourth is the only way to release the Israeli captives is to immediately stop the war and reach a prisoner exchange deal. Now, will this have a lot of traction domestically inside of Israel? That's unlikely. And the reason is because recent polls show that up to 80% of the population supports the incursions into Gaza. So, unfortunately for these families, they likely will not be seeing their relatives return home anytime soon, if at all, sadly. Moving on. Going to go over a few brief economic numbers to cap off today's show. And this is going to be currency's movement against the dollar, the US dollar specifically, and the price of various precious metals in the last 30 days, precious metals and base metals, mostly precious. So let's start with currencies against the US dollar and the directions that they're moving in. South Africa, the South African rand specifically has gone up by 5.2% against the dollar. Australian dollar has gone up by 4.2%. Russian ruble 3.1%. Mexican peso 2.8%. The euro for the eurozone is up 2.1%, which is significant considering that the euro has declined catastrophically to the dollar over the course of the last 15 years. The UK is up 2.1%. The British pound. South Korean won is up by 1.9%. Don't know what Indonesia's currency is off the top of my head. 1.6%. Turkey's currency is up 1.5%. Canadian dollar is up 1.2%, which is a lot to trade up against the dollar for the Canadian currency. Historically, it's been a fraction of the value of the US dollar. India is up. The India rupee is up 0.4%, and Chinese yuan is up 0.3%, with the Japanese yen down 0.7%. What this means is that the currency appreciation of these countries versus the dollar means that they can buy more goods and services priced in dollars. And this is likely, and if you look at the three of the top four in this list, South Africa, Russia, and Mexico are all, currently or will soon be BRICS countries. Mexico has applied to become a member of BRICS, much to the chagrin of the American establishment here in the United States. And as for the prices of various metals in the last month, platinum is up 15.4%. It's actually outperforming silver in that time frame, as is copper. Copper is up 13.8%, Jason. And this is important, ladies and gentlemen, because when copper prices go up by this much and they outpace silver, silver is going to catch up big time. And silver's up 11.5% on the month. It actually cracked $30 resistance, which is the highest price that it has achieved since 2013. So it's at an 11-year high as we speak. Iron ore is up 8.9%, and gold is only up 1.4%. And this is likely due to the fact that a lot of the gold buying and the demand for gold has been mainly coming from central banks. But interestingly, steel is down 1.4%, titanium is down 2.9%, and lithium is down 5.4%. So this tells me that people are moving their money into real assets and away from base metal assets or assets that are related to construction or related industries, which tells me that we are going to see extended financial challenges throughout the world as a result of real economies not being able to cope with the economic malaise that is incoming. And Jason, those are all of my talking points for today's episode. And I'm be really interested to see your TA on Bitcoin, because I missed some. I was hoping to get myself a little bit of a dip between 57 to 55K, but that 60K support held pretty good. So there's an RSI golden cross on that chart recently. So interested to see what your targets are, so trades can be properly managed going forward. Over to you, sir.
Sorry, Chris. My apologies. I was caught on mute there. I appreciate everything that you bring us as always. That was a pretty wild ride. And yeah, things have definitely been moving not only in the metals market, but in the crypto market too. So plenty of volatility that's been picking up here. So there's plenty to cover TA wise. I'll try and touch the most important bases that I can. We probably, I'll admit, maybe sounded a little too bearish last week. But with that, really, more than anything, I was highlighting the support and resistance. And we stayed above those critical levels. Okay, you can see there was a point of control here around, just above that $60,000 level. There was a lot of volume accumulation there. And there was also a lot of volume that came in just below 63. And that caused a nice short squeeze for us. So we're kind of in this pattern right now. It's not the prettiest pattern, but really when it comes down to it, it's probably an ascending triangle that's forming there. If you want to use those as your touch points. So if we look at this as, a potential BART pattern, can this come back down? Yeah, we could see some retracement. If they want to mess around with us a little bit. So obviously the volume's low, so we may, see some market manipulation over the weekend going into Monday. We always talk about that. And again, nothing that we say here should be construed as financial advice. You can always look for a financial advisor and also do your own due diligence and research before you jump into any coin investment project or trade. But with that all said, I did manage to catch this short squeeze, and I did make my Discord aware of that. So I am still in a long position. I did take 50% of that off the table, just based on the fact that I'm not 100% bullish on this formation right now. I'm going to show you why. And it's this right here. Okay, so it's that bearish divergence that I'm looking at right now. I really haven't seen the larger move down based on that divergence. All right, There is a little bit of hidden bullish coming in right there where you can see we swung down lower in the price action here, but higher on the RSI. And this lower swing here is higher in price action. So we're going to be sort of looking at these lines here and seeing if that breaks. If we see the price action come down, you've got this other volume node here just above 66K. You've got the 236 fib here around 65.6. And then your retracements would get a little deeper at that point if you didn't hold up at the 382 and sort of double bottom on this formation around 64.5. You've got a volume gap down here to the golden pocket, and that area is between around 62.7 to 62.9. And if that didn't hold, 786 fib, 61.7 area, and 60.9K is where a lot of the volume came in. So is it possible that we come back down here and double bottom out more on this formation? Maybe. As low as the stochastics are on the 1 hour, I'm not 100% sure that we'll see that much of a pullback with this right now. The market is holding the price up for the moment. If we zoom out on the 4 hour, however, there are also some bearish things to heed here too. Keep in mind this is just in the short term. I'm not like bear like we're going to go low or break this current support, but I have a feeling before they really send it here, they may try to wash us out a little bit more. So if we look at the divergence that's coming in here on the 4 hour and what might potentially be occurring, let me get out to a little cleaner chart here. I do more trading on MEXC. Take a look at this Binance per contract. Should be a little cleaner here. All right. So I was kind of highlighting what might potentially have been a Adam and Eve here, or inverse head and shoulders. So are we seeing the break out of that? Will we see the retest of this pattern? Or was this the retest right here when we wick down to this area? So those are kind of the questions that we have to ask ourselves in the shorter term. And if this divergence was to play out, you could actually see a little deeper retracement if we look at it in that aspect. So 60K is still on the table for some type of double bottom or a retest, but it's not likely, I would say, at this point. So if we just go off the recent move and we pull the fib on that, you've got some confluence here at the golden pocket. So I would say if we're going to see a pullback, you're looking at like 62.9, 62.8 to maybe 63.2. So I would put some buy orders into that area if you're looking to get a little better position or bolster your position, or if you missed out for whatever reason, on these other lows, we may come back down to that area. That's definitely a spot to watch. If we don't see retracement into that area and we see this pattern continue to hold, and keep in mind, 4 hour here, we're a little bit far away from the 21 MA. So at the very least, I would look for a retest of this 236 fib. That's around 65.9. If that doesn't hold on the 4 hour, you've got this support here at the lower Bollinger Band again that coincides with the 382 fib at 64.9, and then you're talking about these lower levels. But we do have this volume confluence here again just below 63K. If there's a pullback, that's the most likely area, and it would shake out a lot of leverage, and I'm sure there's probably a lot of open interest at this point. I know I'm long, and I know other people have opened some longs as well. So with that said, Any pullback I would see as a buying opportunity right now. I wouldn't expect it to be a major pullback, but we are in an area here, 67K, where there is potentially some larger resistance. There is an area on the daily chart where we want to essentially see us stay above about that, 65.5 area. If we see a wick below that, that's not a big deal. We just don't want to be closing daily candles or weekly candles below about that 65 to 65.5K. Really want to hold support there. All right. So, a few things to highlight. I was briefly looking at the DXY. Well, Chris was talking about some of the currency stuff. So you can see DXY here in this pattern, and to me, this is a bit of a bull flag. So we need to be careful and cognizant of the fact that the dollar could make a little bit of a push here, and even if it does make this push up here, that could still be considered like a dead cat type of a move, or just like a reactionary move before we see further lows. So you can see this move here is in pretty good confluence with where we would typically see a pullback. There's a little bit of volume up here around 112 as well. So if we see some sort of a double top here and a catastrophic dollar collapse, if this comes up in double tops, we're looking at retesting these areas here in this 90 to 92 region. All right, and obviously this is a little more macro, and this could just push sideways. So you've got moving averages here, fairly critical support, right around that 100 level, which is in confluence with the 200 weekly. But if for any reason we see a move up and then a double top type of a scenario and a move back down, if this support breaks, then we're looking at this down here. So may potentially see some volatility coming in for the dollar. And honestly, with low stochastics, I would look for a potential move up here. I don't want to say like sooner rather than later, but soon-ish, as we're on the daily here. I don't know how much longer this is going to hold in this consolidated pattern. All right, so let's take a look at Bitcoin dominance. We're in this sort of rising channel here. We did allude to the fact that we may finally be moving up towards this area of confluence here that we've been looking for, around 60%. The reason that I'm so thirsty to get up to this area is because once we get up to this area, we can see the dominance potentially come back down and give up some of the dominance to altcoins. So that will be hopefully a turning point in the market. Right now, however, it seems to be breaking through some divergences here that were having some bearish tones. You can see a higher swing in price action here, but a much lower swing on the RSI. But the RSI does seem to be breaking through that line of resistance, and we also did have kind of a bearish divergence on the stochastics as well, which is starting to curve up off the 50 level. Keep in mind we're on the 5-day chart for dominance, so may even be seeing a little bit of a head and shoulders type of a thing. It's a little ugly. But that would put us into that range. It would actually put us above that range. So we'll keep an eye on the dominance here and see if that continues to push up as the Bitcoin rally continues, or if we can see the altcoins come in and take a little more dominance. I did put a warning out in the Discord, which is part of the reason why I took half my trades off the table. We are seeing a bullish divergence for tether dominance on the 4-hour. You can see this swing down in price action is lower than this swing on the RSI. Take a look here. We are seeing this kind of build confluence here. Stochastics are pushing into this middle territory close to the 50 level, with the blue above the red, indicating a little bit of strength coming in for tether dominance. So watch your bags over the weekend, as always, folks. And this almost has a little bit of a falling wedge vibe. Not a huge, type of a disparity there. Or you could potentially even look at it like that. However you're looking at this, there's some consolidative stuff going on for tether dominance. If we were to see a breakout above the 200 daily and the 200 weekly moving average, and that would be established as support, we would see a larger pullback in the market. So be careful, as always. I will say, right now, this has a little bit of a vibe. All right. So what we want here is for this to be a bearish retest. So if we were to come up to this area of volume confluence, if you can call it volume, it's more just staying at that particular level than it is volume, as it's not actually a measurement of an instrument so much as the dominance of that instrument. But with that said, this area would be where you would want to see a rejection for tether dominance around this confluence of volume node, 4.83 to about 4.89%. If we see a nice rejection there, bearish retest of this head and shoulders pattern, that'll be good for the whole market and for the altcoins. So the hope would be that we come back up here and see a little bit of a move into this territory or whatever, wherever we come back up on the RSI. As long as we come back up on the stochastics, reset here and haven't made a significant move up and show this as a bearish retest, it should be good for the rest of the market. If that doesn't play and we have this larger thing going on, sort of drew this potential pattern here a while back, and this is, it's probably a little loose. It may need to be adjusted a little bit. But there is still a potential for something like that to come in, so just keep an eye on the dominance for both Bitcoin and Tether, because it's going to give us more of an idea of the direction for the market. And I was able to call the long this week based on that. So always keep your eyes peeled on those. Moving over to total 3, I was looking potentially for possible like reverse Adam and Eve, but it looks like we're negating that, so I'm gonna delete that work for now. Keep our optimism open for the altcoins. However, there is potentially some resistance here. We may be breaking and retesting that right now, actually. So that's kind of the vibe there. If we get retest here, that would be great. That would line up with the move that I just highlighted for the tether dominance. If we get that bearish retest, you can expect the altcoins to come back down, retest here, and you can see on the 4-hour we're losing strength on the stochastics. So let's really keep an eye on that as the potential move that's coming in over the weekend. You know how they play the game, wash everybody out, but we do actually have here, if we look, and I mean really look, because it's tight. You got to really, really look sometimes, and you're like, well, does this really matter? Yes. This is a bearish divergence here, where you have this swing up that was slightly higher, and this swing up that was slightly lower. And as we look at the total 3 price action here, this swing was lower in the price action, this swing was higher, corresponding to that bearish divergence. That's why we're starting to see this move down. So keep in mind, bearish divergence is not always going to be the most obvious thing. You may have to dig for it a little bit. And if the market manipulators are really good at their job, it'll be a little harder to find. All right, it won't be quite as obvious. And that's definitely been the case over the last several weeks, and honestly couple months since we ran up into March. The market's been really volatile. The divergences have been harder to read. The price action has been harder to read. If you're not a really experienced trader, you probably got washed out. I haven't personally been trading as much. I was waiting for a little more obvious opportunity, and thankfully that did come to me the other day. So I do have a couple positions open as a result of that, and did take some profit over the weekend. But it has been a difficult life for traders unless you're really just scalping smaller time frames and being really greedy, taking those profits off the table immediately. So just keep in mind that's kind of what's been going on there. Let's move over to Ethereum. Ethereum made a nice move up as well, back above 3,000. However, again, we are seeing these bearish divergences come in, right? So we see this swing up here. It's actually higher on the RSI compared to this higher swing in price action, lower on the RSI. In my estimation, this is still playing out. Okay, so if we were to see full retracement of this move, we're looking at this volume node around 2950, just below the golden pocket, which is around 2953 to 2959 area for Ethereum. So that is a potential retrace. If it were to see a little shallower retrace, like if this area of confluence were to hold, where I was able to catch that breakout on that inverse head and shoulders, we could see support come in anywhere between about, this volume node here around 2972 all the way up to around the 0.5 fib, which is just above 3,000. So if Ethereum holds 3,000, that's going to be pretty bullish. You just kind of have to question the market structure and what it's going to do. Can we form a cup and handle here? And where does our handle come down to? What does that project out to be? Where do we end up at? Do we see something like that? Some sort of a flag form that would take us into Monday, right? And then we can see where things go. So I'll project that out for ETH, and we'll see if that takes us where we want to go, folks. Where we want to go. If we look at ETH BTC real quick, 4 hour, there was some bullish divergence that came in and gave us some relief. Actually, I take that back. It was showing up on the 6 hour. I was looking at this on my phone, and the divergences were for ETH were showing up on different time frames than I normally use. They're showing up on the 6 hour and the 2 hour. And again, folks, I just went over this. The divergences are kind of being hidden, so you may have to dig for them a little bit more. So that divergence more than likely has played out. And now we're seeing a little bit of bearish div come in. Oh, no, maybe not. Let's see. Let's see here. No, no bearish div yet. You're still swinging up. So potentially still consolidative for ETH BTC, even if it just retests this 21 MA. Could be seeing some type of head and shoulders come in. If we just look at this wick as an anomaly, that was a really odd wick if you were watching the price action the other day. Really, really strange. That sold off very quickly. So I think there's definitely some market manipulation going on with Ethereum. I think it's definitely being pressed down a little bit as Bitcoin continues its run after its ETF announcement earlier this year. But we do have potential Ethereum ETF news coming. A few smaller ones are set to be either approved or denied, I believe, coming this week. This next week, I should say, and then I believe the end of the month are the big ones. BlackRock and I forget who else, but there are a couple big ones there. So watch out for those, and watch out for market volatility. It's going to be a volatile month. All right, I'm going to plow through some altcoins here. Jumping over into BNB. Just going to get rid of that fib, clean up our price action a little bit. We are consolidating for BNB on the 4-hour in this, whatever the heck you want to call it, whether that's a neckline or whether this is a chubby triangle. We're consolidating, right? So higher lows, lower highs, and wick down consolidation around the 21 MA. Not really getting a lot of clues for BNB, but it does look fairly consolidative. So if this is continuation, then we'll see another move up. And the next projection is around 642 for BNB, and that would challenge this previous high here. And at that point, you could potentially choose a trend direction, whether you have to come back down, consolidate more, or break out and establish that as support. If it is established as support, the next area that I'm looking for is well above $700, probably close to $770 to $777, somewhere in that area. I'm going to move over to AERO, Aerodrome Finance. I did ape into this thing as we continue to move in this area, so I'm just accumulating AERO, and this looks pretty consolidative to me. If we break out of this flag, the next target for AERO is $1.36 and $1.57. We may be seeing a little bit of something like that. We'll see if it continues to consolidate in that manner. All right, low stochastics on the 1-hour. That gives us a chance for a bounce. See if there's any divergence here. There's actually a slight hidden bullish divergence on the 1-hour right now, so let's keep an eye on that. It's not like the prettiest inverse head and shoulders, but there is a little bit of a potential neckline or a vibe there. So, more than anything, maybe this is a little bit of a falling broadening wedge. So see something like that, move up to 120, choose a trend direction. So that could get you started for Aerodrome Finance. You can buy that with fiat on Coinbase. Another one you can buy with fiat on Coinbase, this is ALEPH.IM. ALEPH is your ticker symbol. This coin right now is sitting around 36.5 cents at time of recording. If it gets a break out of this flag, or you could potentially call this a little bit of a cup and handle type of an action, right? Got potential 80+% gains on the table if you see this flag break out. I'm not sure I'd get in with the high stochastics right now. You may actually want to wait for the breakout and retest, as it could come back down and provide a better entry. Again, folks, this stuff is not financial advice. Get yourself a financial advisor. Do your own due diligence and research before jumping into any coin project, investment, or trade. If you enjoy the TA so far, and if you've made it this far, thank you very much. First of all, please, if you haven't, honk that like button, get subscribed to the channel, hit the bell for notifications, and we'll bring you more TA and news coming up. All right, something to keep an eye on too. This is a low cap that's really busting out here, and this thing has actually moved. It's working on about 350% now from the bottom, just below 1.5 of a penny. It's up over half a cent now. This is Spectra Chain. This is a Bitcoin layer 2. You can actually buy this on Uniswap or MEXC. All right. So just keep an eye out for that. Full disclosure, I am holding this thing. I am down. This move kind of caught me by surprise. I really wish that I would have averaged into this area. If I would have seen, look at this. This bullish divergence here where we're swinging down lower in the price action, or excuse me, lower on the RSI but higher in price action. Lower in the price action but higher on the RSI. You can see this produced an explosive cup and handle breakout. All right, so keep an eye on that. If we get pullback or retest, I will ape in. And what I'm going to be watching for right now will be something like that. All right. And I would be pretty lucky to see that type of a retracement, but we'll see. Okay, we'll see. It's a pretty voracious pump right now. No guarantees. So just looking for a pullback. I'm not buying that right now. Full disclosure. All right. To get a couple requests for a few other coins from the Discord. I'm going to take a look at XCH and Avalanche for Xavier, our mining expert. Shout out to Xavier. Thanks as always for keeping things going in the Discord, both with the mining information and with meme shit posting and, you know, just other fun stuff. I posted some great photography the other day of the Aurora with a new camera that he bought. So Xavier, really cool guy. Really appreciate you being in the community, man. So XCH, right? Let's take a look at MEXC here. I didn't want the perp contract. Zoom out a little bit on the 4 hour. It looks like we're getting some type of a flag or consolidation here. After we saw a pump, there was this move down, capitulation, right? Let's see if there was, yeah, there was a bullish divergence there that got it started. Okay. So it wasn't like the hugest divergence on the RSI, but regardless, you swung down lower on the RSI here. A little bit higher here, but if you look at the corresponding price action, higher over here with this lower RSI, lower on the price action here, but swung up a little bit higher on the RSI, and that caused this pump. It's a decent pump from $27 up to $36. Was not able to hold the 200 daily as support, bearishly retested, and now consolidating. So the idea here would be that you're kind of in this zone where you want to think about making an entry. How much further can this come down? Probably not that much. Forming a little bit of a falling wedge. So I would look for this pattern here to continue to play out over the weekend. If you see a move down to the 786 fib, that would be really attractive, just above $29. All right. And if we were to see a breakout of this pattern, measured move from the point of control will take you to 40 bucks. So XCH could make a 33% move, and you know, this thing tends to spike pretty quickly and then consolidate. So, you know, this coin, it does have some potential because there is supposed to be an IPO coming for this thing. So again, not financial advice, but you're consolidating here in this range. It's like a larger range, right? So keep an eye on that range to break, and this thing actually has pretty fair upside at this point. If you take a look at where it's been previously, this thing dropped on MEXC and people were paying $2,700 a coin for this thing. So, you know, I'm not saying it has to go back to $2,700. I'm not sure about the tokenomics, all that other stuff. If you're curious about that, do your own research. Maybe ask Xavier if he has any information. But when it comes down to it, you know, this thing is really, really far off its all-time highs. And if you have an IPO come in, you know, you could, at the very least, see something like this where you at least come back up to the golden pocket around like 1700. So, you know, 1700 to 1800 area. And that would represent a, you know, a pretty decent move from here. So just keep in mind, this thing does have some upside, and the stochastics are very low on the weekly, so it may actually be buying opportunity for XCH. Another coin that Xavier asked us to take a look at was AVAX, larger market cap, layer 1. Do have my work here. I'm not seeing anything major has changed. Seeing a pretty nice consolidation in what we're actually seeing right now. Borrow that line from whatever the heck I was doing with that before. This is a pretty nice hidden bullish divergence where we were swinging down a little bit lower on this price action with this wick, but you're much higher on the RSI. And you're seeing this consolidation around the 50 level. Keep in mind we're on the weekly chart. And you're swinging just a little higher on the price action with this consolidation lower on the RSI. Low on the stochastics, resetting with the blue just above the red in this overbought territory. It's a pretty attractive setup for AVAX here. This may actually be the big move coming in. All right. And if this is the big move breakout and retest, I'm going to clean this up a little bit here so folks can see it a little bit better. If this is a breakout and retest of this larger pattern, well, these actually were measured in log. Let's get rid of these. Alright, so we're not in log right now. So this is the area that I had highlighted here, just above the golden pocket. It's right around $100. So that's the next logical move for AVAX. So could it potentially do close to 200%? Yes, I think it could going into the end of this year. So I would look for that move. If you see that move happen, I would take some profit at the end of the year and maybe expect this to come back down and consolidate a little bit more before possibly making a larger cup and handle. So let's see if something like that plays out. Could actually see a larger move come in. You see like the full measured move from the breakout. And I'm not measuring that from the retest, I'm measuring it from the breakout. That would take you to 175. So AVAX looking pretty strong. I mean, can it, you know, 5 to 7x from here? Yeah. Yeah, totally. It could make a new high. And, you know, it could make a new high, come back down and retest these levels here. And then you could be looking at something more like this. where your cup's got a little bit more of a slant, and maybe you even come back down and retest these areas around 100. So anything could happen here in these markets, folks. Just keep in mind this is setting up pretty bullish for AVAX. All right. Last one I'm going to go over this week, and I am going to be on my way because it is my youngest daughter's birthday today, is ONDO. All right. You buy ONDO on Coinbase as well. You can see you're consolidating on the weekly. This thing is looking pretty decent. So, you know, you got a pretty obvious top that was kind of put in there, right? You got this ascending type of a structure. All right, so I mean, no matter how you want to slice this, you're putting in this ascending type of a structure. So, you know, you get a couple measured moves out of that. So $1.45 and $1.69 will be the next major moves for ONDO. Keep in mind it's a pretty large market cap. You're getting a little overbought here on the daily, so I would be careful with that. You're not putting in a bearish div though, so your hope would be, you know, maybe come back down here, consolidate around this level, maybe around the 50 level on the RSI. This isn't like the most bullish looking daily to me because it's kind of, it looks like it's still consolidating and you've kind of come up in major move, and you need to cool off a little on the daily first before you see a more of a move come in for this thing. So let's take a look at the 4 hours, see if there's any other clues there. Really? My machine really doing this to me? What? There we go. Never in my life. This machine has been an absolute beast since I bought it. I have so many windows open, so many programs, apps and stuff, and it just takes whatever I throw at it. And honestly, it's been running without any kind of a restart or a reboot or anything for weeks. So really do like this computer. It's a build from Newegg, and I've heard a lot of people knock them recently, but for the money that I paid for this computer, it's been freaking fantastic and worlds better than the laptop I was using, which was actually in a similar price range. So wild. Yeah, this has to come down a little bit. All right, you're gonna come down a little bit on the 4 hour, wherever that comes down to, whether you hold this 21 MA or you retest this POC. You're looking between, you know, 80 to 90 cents, a range that you could still consolidate in before making that move up. Break of this range, you know, break of this pattern. Retracement would come back down to golden pocket, which is around 62 cents. You know, a double bottom could play out between anywhere around 38 all the way up to around 52 cents. So just not overly bullish right now based on the 4 hour and the daily. If you're looking at DCA, there's going to be a dip coming up here where you can scoop a little bit up. You know, I just can't be too bullish right now based on what I'm seeing here. But again, you know, is this a bearish divergence? Excuse me, folks. This is actually like a hidden bearish. All right. I won't call this out too often, But you can see here, I'm going to highlight it in the price action because it may be a little hard to see. You had this close higher over here on these candles, but you didn't come up that high on the RSI. You actually just peaked above that 70 level. But you are not able to close as high over here as you did over here. But you were higher on the RSI. So this is telling you that it got too cooked. So even though you didn't see this bearish divergence come in locally on this move, it actually goes all the way back to this area here. So that's why you're seeing that move down right now for ONDO. So a little bit of TA to end the day and the week for you. I hope you've enjoyed the podcast, as always. If you've made it this far, I do thank you again. Please, on your way out, if you haven't, honk the like button, get subscribed to the channel here, hit the bell for notifications. We'll bring you these podcasts every weekend in a timely manner. And again, I hope you appreciate the information that both myself and my co-host Christopher Lundy bring to you every week. Most of this stuff you will not hear or see anywhere else. You may have to pay money to pick up on this stuff, or really dig and do your own research to make sure that you're getting the news and the technical analysis that you crave. So with all that said, I hope we provide value to you. That is our goal here. I am Jason Bruce. This has been Crypto Clown World, our podcast for the 18th of May. I hope you all have a fantastic and blessed weekend. Take care. Much love. And we'll be talking to you soon, folks.